Hello there. Welcome back to Business Studies A level. In this video, we want to look at a typical examination question. So we have got a question that we have here, and our question is got 10 marks. So our question reads, with the aid of a suitable diagram, discuss the importance of break-even chart and discuss its benefits and limitations. So uh, we are having our question. So obviously, we are trying to interpret the question in terms of what does the question require. So you see that on the first part, it's saying with the aid of a suitable diagram. So which means you are supposed to explain the break-even chart. You're supposed to present it in the form of a diagram, and then after that, obviously, there should be a brief explanation that you're supposed to give beneath the chart in terms of what is transpiring on the chart. So basically, that's the first part. Then the second part, we are being told to discuss all the benefits and limitations. So basically, you are supposed to come up with the benefits of the break-even analysis, and also you are supposed to come with limitations on the other end of the break-even analysis. Remember, this is a two-sided question as we are being asked to discuss. Remember, when we are to discuss, we are supposed to look at both sides. So this is exactly as we have our question. So remember, this is a two-sided question without a judgment that is supposed to come out in the discussion. Remember, in discussion, you can as well, if it's possible, you can also put the same number of points on both sides. That is the same number that we're going to include on the benefits can be the same number of points that we also include on limitations. So this is what we we are going to start by graphically presenting the break-even chart. So this is the first part that we are just trying to put down, whereby we are saying break-even chart. Chart is the heading that is going to lead us to the chart. So on the presentation of our chart, we are supposed to come up with our axis, whereby we are going to have your vertical axis. And obviously, with your vertical axis, you are supposed also to present your horizontal axis. So in this way, we now have our vertical axis and our horizontal axis, and then we try to label them, whereby our vertical axis, we have revenue or cost, output, obviously quantity, then with zero there to show that this is our point of origin. So we can start by showing the total revenue curve. Remember, the total revenue curve is a 45-degree line from the point of origin. So we've got our point of origin here. So we are going to present a 45-degree line there, which is going to represent our total revenue. So this is typically what we have in terms of our total revenue. And obviously, we need to label it, whereby we are saying total revenue. Then from there, we are supposed to try to come up with our fixed cost curve. Remember the fixed cost curve we are saying? Maybe before we go to the fixed cost curve, we can try to explain in terms of the total revenue curve. Why is it starting on the point of origin? It's because if we produce zero output, zero number of units, we are also going to get a zero revenue. We are also going to get a zero revenue. We are not going to sell anything. So basically, that's what we have. But which is a different scenario when we go to cost. On cost, we have got our fixed cost. Remember, our fixed costs, we are going to have a fixed amount. Remember, fixed costs do not change with level of output. So we are going to have our fixed cost curve being a horizontal curve. So basically, we can just try to present it in the form of a horizontal curve, whereby we are saying this becomes our fixed cost curve. So we can also try to label it by saying fixed cost. So we are saying our fixed costs do not change with the level of output. We are saying that the fixed cost is just at the same figure. If we have got 100 here, it means it's 100 at any level of output. It means even at zero, if you don't produce anything, you are also supposed to pay the same amount of fixed costs. So that's what we have examples of fixed costs that we have. We've got a cost like rent. It's a fixed cost which doesn't change. Even if you don't produce, you are still supposed to pay the rent. So those are typically the costs that we are talking about. Then from there we have the total cost curve, which is going to start from where we have got our fixed cost. Remember, to get our total cost, we are going to say our total cost is equals to our fixed cost plus our variable cost. So obviously, at 0 units, we still have our fixed costs are being the same amount, which is here. So that's where we are going to start. So we can just present our line from here as our total cost, whereby we are saying this becomes our total cost again. So we can also try to label it as total cost. So these are the curves that we have. We've got our total revenue, total costs, and then we've got our fixed costs. Then we have got the break-even point. Remember, the break-even point is the point where we have got the intersection of the total cost curve and the total revenue curve. So we are saying we are having that point here. That's where we have got the break-even point. So in this case, we can just call it as the break-even quantity. We are going to have it here. Break-even point, we can just say break-even point. This is our break-even point. That's where we are going to have our total cost equal to total revenue. So we can as well try to explain what actually transpires in the break-even point. Remember, in terms of defining it, the break-even point, we can define it as a point where total cost is equal to total revenue. Our total cost, of course, it's comprised of the fixed costs and the variable costs. And also, you see that a break-even is the point at which revenue and total costs are the same, meaning the business is making neither a profit nor a loss. So at this point, the business is not making a profit, it's not making a loss. The profit is 0. Let's take note of that. So that's what we have on the break-even point. And obviously, now according to our points, we can try to show the break-even quantity by going down. If you go down, you see break-even quantity. So that's what we have. And then we can just choose any point where it's going to indicate our current output. So we can just try to come up with a vertical line that is indicating our current output. So we can just maybe try to points output, total axis, which is our output. So we have got the space that we have there between break-even quantity and current output, that is here. So we can just try to show it by saying the space that we have here. So basically, that's what we have, and we can just try to label it again. The difference between current output and break-even quantity represents margin of safety. So basically, we are saying this is going to be your margin of safety. So what does the margin of safety entail? It's also important for us to try to understand what the margin of safety says. And the margin of safety basically is calculated by saying current sales minus the break-even value. Minus the break-even value. So basically, this is how much output for before a business makes a loss. So we are saying, remember, at the break-even point, that's where we are having profit equal to 0. So if we produce below the break-even point, we are now making losses. But if you produce above the break-even point, we are making a profit. So this margin of safety shows that we can reduce production up to break-even point without making a loss. But the moment we reach the break-even point, we go backwards beyond the break-even quantity, we are now making a loss. So basically, that's the use of the margin of safety. How safe is the business, even if the production is reduced? So we can measure it by comparing it with the break-even quantity. So basically, that's what we have in terms of the margin of safety. So this is the presentation that we have. So of course, beneath that, you are supposed to come up with a brief explanation in terms of what is transferring by showing that our break-even point is that our BEP, according to the information that we have. You are now saying your BEP is your break-even point. where your total revenue is intersecting the total cost curve is the break-even point. And then you explain about the margin of safety. Difference between current output and break-even quantity reflects our margin of safety. So that's what we have. Then another area that we can try to explain is the area between total revenue and total cost, which is here, this side. This one is representing a loss that has been loss that has been made, and then above that we have above the breakdown, it's representing total profit. So basically, we are saying total revenue is greater than total cost. So that's where we have our profit. So on this side, we are having total revenue being less than our total cost. It's representing loss. So basically, we are saying this area is loss, our profit. So basically, that's what we have in terms of the break-even point. So remember, our question goes on. If you try to look at our question, you'll see that our question says, on the second part, discuss its benefits and limitations. So we are supposed to come up with the benefits and limitations of the break-even chart. Or in particular, we are talking about the break-even analysis. So basically, we are now saying what are the benefits of the break-even analysis. So basically, that's what we have. So all the benefits we are saying, the first benefit that we can try to come up with. So basically, we are saying how is the break-even analysis useful in the operations of the business? But we have seen that we have got the margin of safety, which is showing us that we can quickly see with how many units our production can go down without making a loss. So how safe we are as a business as we are producing. So we are saying the first point in terms of our benefits, it shows the minimum quantity. It shows the minimum quantity to be produced to avoid losses. So the minimum quantity is the break-even point. So basically that's what we have. Then on the second point, which is going to be our second benefit, we are saying it shows a margin of safety. It's also a benefit. It shows the margin of safety. It shows the margin of safety as a point, and then we also try to come up with another one. So with that, we can also try to see what other benefits can we try to come up with. It also shows effects of changes in prices and also variable costs. So this is what we have in terms of benefits of the break-even point. So the effects of changes in price, if prices changes, obviously it's going to affect even the break-even point. So that can only be seen when we present the break-even analysis, and we can see the magnitude of the change. If there's a price change, what effect is it going to have on the break-even value? Remember, at the break-even point, we have got at the break-even quantity, we also have the break-even value. So break-even quantity is shown on the horizontal axis. Having our graph there, we are seeing that our break-even quantity is on the horizontal axis, and then break-even value will be shown by the vertical axis from the break-even point. So basically, the shifts that can take place can be easily be noticed if we present the break-even analysis in the event that the prices are also adjust. So basically, that's what we have. Then we'll try to look at the other side, whereby we are looking at limitations of the break-even analysis. So we are saying limitations of the break-even. So this is what we have. I'm trying to see what limitations do we have. So I would say that the first limitation that we can include is that it ignores qualitative factors. Ignores qualitative. So the question is, what are qualitative factors? Remember, we've got quantitative and then qualitative. So quantitative is a representation in terms of quantities, which is represented by number of units. So when I talk about qualitative, they are not represented quantities. Other factors that are not represented in terms of numbers represent qualitative. So we are saying they cannot be quantitative if they are qualitative, and they are not measured by number, so they tend to be subjective. Also, we take note that they tend to be subjective and represent either positive and negative force affecting the camera. So anything that does not involve numbers, we term it a qualitative factor. So this is what we have. There another limitation that we can also take into consideration is that it is not applicable to a multi-product business. It is not applicable. It's not applicable to a multi-product business. Multi-product business, basically, we are saying the one that is producing more than one product, two or more, we say multi-product. So we see that the analysis that we are having, the prices are there, vertical axis are representing the cost and the revenue. So the cost and revenue also are being determined by the prices. So we are seeing that we have got one price that is applicable to that graph. So if we have got a multi-product, it means we are going to have different prices, which is not going to be applicable according to the representation of the graph. So the assumption is there and it's clear that it's a representation of a one product. So if it becomes a multi-product, then the analysis becomes compromised. So this is what we have on the second limitation. It is also based on unrealistic assumptions. It is based on unrealistic assumptions. So the unrealistic assumptions that we are talking about, we're giving an example of output produced. It is assumed that all output is sold. All output is sold. That is the assumption that is there under the break-even analysis. So that is unrealistic. We cannot have. It's very rare to have a scenario whereby all the output is sold. So that becomes unrealistic. So basically, those are the limitations of the break-even analysis that we have, and this becomes the last part according to the question that we have. And thank you for listening, and hopefully the video was helpful. And please, let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing business studies, Zimsec A level. And let's take note, more videos are going to come. More typical examination questions will be uploaded on this channel as we approach exams. So let's stay notified. Staying notified is subscribing and turning on the notification button so that when we upload new videos, you get notified. Let's meet again in the next video. As for this video, I'm signing out.